Hey, Bulls and Bears. It is Wednesday, June 9th, 2021. We have a very, very scary summer for inflation, rising prices, and I think we're going to see price shock even bigger than what we've seen so far. All of the forces that have been pushing the cost of living higher seems like they're only getting stronger. And we're going to show you some charts today that are going to blow your mind. They blew my mind. So let's go ahead and get into it. Let's start right here. CNBC article. This basically summarizes, I think, what we're going to see this summer. Hot inflation may have become scorching in May and is expected to hit a 28-year high. Rising prices everywhere, the cost of living. Even the CPI number, which we're going to look at here in just a few minutes, shows the drasticness of this inflation, these rising prices. The consumer price index, which is very, very flawed, but even the flawed number still shows a massive increase. It's a 4.7% increase. And actually, that's what's expected. We'll see. It could even be worse than that. And we're going to show you what's happening at the Fed that are only going to make things worse. And here's a nice chart here out of the same article from CNBC. Percent change from a prior year. You see we're up right here to the far right. This is approaching where we were prior to the financial crisis as far as the year-over-year increase. Now, it doesn't mean there's going to be a bust. We could have a ways to go. And many people are saying it's going to go on and on and on and never going to stop because the dollar is at the end of the lifespan. So a lot of us here are already preparing for that, for the dollar to become basically destroyed, worthless. It is still the world's reserve currency, so it may not happen as quickly as some people think, but I do think you might want to think about hedging yourself in case we do have this runaway inflation continue to run away and basically never come back all the way into hyperinflation. Okay, so this is the CPI number, but this does not include the cost of housing, rents, and home prices both. If it did include that, it would be way up, even way more drastic than this chart is showing you. Now let's take a look at the markets here. This is out of Yahoo. All major indexes in the red, and they should have been a lot more deep in the red considering all this bad news coming out as far as the cost of living. We see oil breached $70 per barrel today. There is a city here in California where gas prices got up to $7 per gallon. I believe it was in Northern California. And it's really tough here in San Diego to find it for less than $4 a gallon. But it's pretty amazing. It didn't seem to slow people down as far as Memorial Day traveling. Last week it was insane traffic and travel. But we need to take a look at this 10-year bond. The yield now below 1.5. It was a 2.5% drop just today. So what does that tell you? Mortgage rates are going to remain low and are likely going to even go lower from where they were at just last week. And here's a recent article right here. Mortgage rates drop, but not enough for priced out home buyers. Home prices are way too high for this drop in mortgage rates to really make a big difference. So the housing market's going to remain hot though, because so little inventory. And in fact, there's so little inventory right now in the housing market, even if mortgage rates rose some, it would not bring this housing market down. It may slow it down a bit, but as far as popping the bubble, no way. Inventory is way too low. The only thing that can stop this bubble or pop this bubble is if banks quit lending. And for that to happen, you'd have to have some major laws being passed. For example, if they eliminated the fractional reserve lending where banks can loan out money that they actually don't have in reserves, then that would bring down the housing market just like that. Will that happen? No, because whoever is in charge or whoever's sitting in the Oval Office when that happens will get the blame. And there's not any leaders or lawmakers that are going to shoot themselves in the foot like that. Now, if most people knew what actually caused it, then it would be okay because people would understand, then they wouldn't blame that person or that person or that person. They would know that the system was a fractional reserve system, and they know that this lending causes bubbles. And if people understood that, they would know that a change in the banking rules would pop the bubble. But most people are clueless. Again, I'd say 99.9% of people probably really have no idea what fractional lending even is, and probably also don't know what a fiat currency is. If everybody knew that, this problem would be much, much easier to correct, because everybody would be talking about it, not just a couple channels here on YouTube that you have to search to find to get the real story behind all this. Chipotle, one of my favorite places to eat, they said they're going to hike their food prices amid a labor shortage. Right? It's a perfect storm. So many factors here pushing prices up. You have supply chain disruptions, the labor shortage, and companies are having to pay more to attract workers. We have over 9 million open jobs now, and these a lot of these businesses are competing with the enhanced unemployment benefits. Also, you have between 20 and 25 million people living in households that are not paying their rent or mortgage, so that takes a little bit of the pressure off. And think about this: if it were not for the moratoriums and the eviction preventions, how many of those 9 million jobs would be filled? Because people would understand, to have a roof over your head, you better actually get up and do some work. All right, let's go over to this article right here. Reuters: banks still need big help. Fed's reverse repo volume hits all-time high, but yet they're telling us everything is fine, no problem. There's this amazing economic recovery happening right now. If the recovery is so amazing, why do we continue to see headlines like this, where we see the Fed has to take bigger and bigger and bigger actions in the banking system in order to keep things operational? Right? How bad would the collapse be if the Fed stepped back, stopped all these repo operations, stopped buying assets from the banks? You see, right now the banks have no risk. No risk. They make a loan, they turn around and bundle that up into a security and sell it off to who? The buyer and lender of last resort. It is the Fed. Right? Endless amounts of fiat money can be thrown at this lending banking system. So the sky is the limit. This price surge that we're about to see and that we're already seeing is going to get a lot worse. So hold on to your hats, folks. Next, let's take a look at the used car prices. This one about blew me away. Let's take a look. The Manheim Used Vehicle Index. We've been following this very, very closely as we saw the big dip down there when we did have some deflation right when the Great Sickness came out. But then when stimulus and QE to infinity came out, trillions in spending and market propping, then we saw prices rising, and it took a bit of a pause at the end of 2020. But what's been happening this year? More surging prices. This chart goes all the way back into the 90s, and we've never seen anything like this before. And again, it goes back to the basics. We're not manufacturing enough here. Inflationary pressures, the supply chains, labor shortage, companies having to compete with the unemployment benefits, all the assistance being pumped there to the population, which discourages people from going back to work. The chip shortage, part of the supply chain disruption. We need to make more things here in the United States. We cannot depend on importing. That's what we've done basically for decades, and look where it's gotten us, where 70 plus people now live paycheck to paycheck. And it's looking like it's going to get worse. I think when this is finally realized, and there's another survey, I think it's going to be 75, 80, who knows, 85% people living paycheck to paycheck. But I guess it's okay, because the money printers, they could just send out bigger and bigger checks and cause more inflation, and then bigger checks and bigger checks. Where does it end? Where does it end? You let me know. Thanks everybody for being here. Stay well, stay safe, keep stacking, stay prepared. Bye for now.